Hello, my friend. How are you? I'm so happy to see you again. I want to talk about something which is very important for trading and how you think and see the strategy working for you. I want to talk about something that I make it money today, which is, as you can see, that the price is moving upward and downward during the day, and these are consolidation. And on H4, sorry, on daily time frame, that there was, this is the high of the week and the high of the Friday. This is the high of the week and high of the Friday, and this is the low of the day. On H4, you can see that there was a fair value gap, a very big fair value gap, and market structural shift in multiple times. This is a market structural shift. This is first market structural shift, and this is the second market structural shift, and also there is a third market structural shift. So the market is moving upward, but when from where we can go upward and when we can go downward. Going downward is very difficult only for professional who can make a trade on lower time frame and see the structure, where is the liquidity. Those are able to take the price moving down during these candles, but moving upward, we can say how and when uh, we can take the price from below to take it moving upward. As you can see that there was a fair value gap, which is unusual context fair value gap. This is what is called unusual context fair value gap, that moving down. And also there is a very big fair value gap on H4, and we don't know from where we can take the market in this fair value gap. Is the price retracement more to the down or in this area? As you can see, today is there is no news today. On 15 minutes, the price, we are seeing the price here in this area, and in this area, and I'm taking here bearish in this area, and take the price once it's moving below this low. Why? I will show you why. These are double bottom, so there is a liquidity below it. There is a liquidity below it. These are double bottom, so the price will target it. I want to see if the price will target it or not. I saw that there is inverted fair value gap. At fair value gap, it is not significant, and the price didn't respect it. This is inverted fair value gap and this fair value gap, and the price moving down didn't respect it. So the price targeting this liquidity of the low, but this liquidity is not targeted and to reach, just try to touch this line and then moving change its direction. So I will want to talk about leg this leg first. On 1 minute time frame, you can see that the price, how it's beautiful, can target the low of these double bottom, these liquidity of the double bottom. As you can see, there was the price moving from this area. Sorry. As you can see that the price is moving from this area to this area, then 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 this area. Okay. These are, and I'm taking the price here and here, here and here, and here is more likely to take it more than here. Why? I want to show you. This is the higher high. This is a high. This is lower low, lower high, lower low, lower high, lower low, lower high. In this area, we saw that there was a fair value gap here. This fair value gap on 1 minute. Okay, on 30 second, we can see how the price move. On 30 second, how the price move. This is also another fair value gap. I take the price once it's reached it here, and once it reached this area, and put the stop loss above this swing high and targeting this liquidity area. You can see, you can see what is that? Two times I make it. Okay, I targeting this above the swing high because why I take above the swing high? Because the price, if it is hit the stop loss, that means change its direction. That means change its direction, and I'm supported by two fair value gap. This first fair value gap, this is first value gap, this is the second fair value gap on 1 minute. And also when we go more we can see that there was also inverted fair value gap here on 15 second. So the price was targeting the low of this market. So I'm going low down because I saw that the market firstly sorry that the market firstly make a change in the market structure here, change in market structure, and retraced. So this leg from this area, sorry, this leg is bearish leg. Is bearish because it become. Sorry, I will remove this fair value gap and this fair value gap. Make a market structure shift. This area make a market structure shift. So when I see the price retraced to this area, so the our stop loss is above this swing high and targeting this double bottom. So the price make it, and it is very beautiful to move down more and then change its direction. That's the first thing I want to talk about it, which is very beautiful, and multiple times the market make it. When the market move down and then change its direction, it makes multiple things. You can see here on 1 minute, it's changed its direction after taking the liquidity from the low. It's targeting the swing high again, the swing high again. Okay, so in this area, the market moving down, then moving up, and then moving down, making a market structure shift. This is a market structure shift. When the price moving down, then moving again, moving upward, it make what is called SMT. It is a mitigation block. This is called a mitigation, mitigation block. Okay, so this high uh, doesn't able to push the price below this low. So the price changes direction and moving upward and make a market structure shift. You see a market structure shift, and then another market structure shift. This another market structure shift. Then it raised when the price it is retraced, it returned to this area. When it into this area, we check that there was a fair value gap, two fair value gap, and there was a rejection area. So we can take the price here from this area and moving upward the price, targeting the high of the swing, the high of the swing, as you can see how the price moving from this area, from this area we take it here, and the price targeting the swing high. And also this is another opportunity to enter in the market. This is an opportunity to enter in the market. There is another opportunity to enter in the market. I will show you how we measure, how we see these opportunities. I want to show you also in this area. I want not more lines to make it to be able to see clearly. If you can see that there was a fair value gap here also, and there's a rejection in this area, and also this is an order block. This is an breaker block or order block. This is order block, breaker block. This is order block, sorry. This is a breaker block. And there was also inverted fair value gap in this area. Inverted fair value gap. So when we enter here or enter here in this area, our stop loss is below this. Or there was also another fair value gap here. So we can make a trade in this area if you want, Our stop loss is below this area. Okay, we can take the price from 3365, stop loss 3363, but our target is the switch high. Our target is the switch high. You can see. Sorry, I will remove this because it is for another trade. For another trade, you can see these are inverted fair value gap. This is a breaker block. This is order blocks. This fair value gap, and this is another fair value gap. So our stop loss is below these areas, protective areas, and targeting this is winch high. So the price moving with time, retraced because of this order block, retraced from it rapidly, then moving upward to take its profit. That's the very beautiful how I want to, or what I want to say it. All these are happen after taking the liquidity from the double bottom. So the price change is direction. If you are coming to the late to the market, you are coming late to the market. What you will see and what you will look for to see the price where it's going. If you are late and going to this area, the price taking the liquidity from the switch high. There is another switch high. This is the switch high. You can see this is the first switch. This is the second switch, and this is the second switch also. Sorry, this is the first switch. Sorry, and this is the second switch. And you are late coming here. What you will see, what you will see. I want to show you something which is very important. You should look for. The first thing that uh, you can see if the price targeting this swing or not. How you can know? The first thing that there was a fair value gap here. This is a fair value gap on 15 minutes. Okay, this 15 minutes. Sorry, 15 minutes fair value gap. This 15-minute fair value gap. This first. The second, this is a breaker block. This is a breaker block, but this breaker block is not uh, associated with fair value gap. So the week we will not use the week because the week is not coalesce with fair value gap. So we will take the body and the week below because these week below and this body is a bullish. So it is a breaker block. This is a breaker block 15 minutes. 15 minutes breaker block. Okay. This is the second thing. When you change it to 15 minutes, you can see that the price is moving up, then moving down, make a rejection. Also on 15 minutes there was a rejection. Okay, and on 1 minute we can see we can see that the price moving on 1 minute. We can see that the price is moving from 1, 2, 3, 4, 5, 6. So the price make a market structure shift, then return to this area. Here we can enter. Here we can enter. How? Because it is a market structure shift. Sorry, this is a market structure shift. You can see that there was a fair value gap, market structure shift, first, market structure shift, second, market structure shift, first market structure shift, second market structure shift, fair value gap, and also inverted fair value gap. Inverted fair value gap. You can enter here in this area and take the profit here. Okay, our stop loss. Uh, as you can see that we have two fair value gap, inverted fair value gap and fair value gap. So our stop loss is here. You can see here. Sorry, this is for bearish. We go for bullish. Our stop loss is here, and our take profit is here in the profit high. So we can enter in 3372 and take a profit 3375.5, and our stop loss is 3370. That's once the price making a market structure shift, we look for retracement area. In the area that retracement is very beautiful, or the places of fair value gap, inverted fair value gap, and the swing low. And also we can see that there was a rejection, the rejection from this area. So you can see the rejection this area, rejection. We enter here, we enter here. Sorry, I will show you. We enter here. Okay, we enter here on 3 minutes. You can see that this rejection, it will support our entrance here in this area, will support our entrance, so the price moving upward and take a profit. Thank you very much, my friend. I'm so happy to explain these important information. Thank you very much.